It's been an amazing week and a half for Yellow Corporation and the retail movement behind the stock price surge. Over the weekend, trucking company Yellow announced that it would halt operations and lay off its entire workforce of roughly 30,000 employees. The move was spurred by a long-standing battle with Teamsters, a labor union focused towards freight drivers and warehouse workers, as well as due to mismanagement. Despite the bad news, however, shares rose more than 300% as of last Monday. The move higher has been aided by a series of massive purchases by no other than the Harvard University-backed hedge fund MFN Partners. From July 26th to July 28th, MFN Partners acquired over 7 million shares, most of which was purchased between 57 and 65 cents. So that helped spur the rally. However, over the weekend, the reality of bankruptcy became real. Let's get into this article. And this is coming from Fox Business. Yellow Trucking files for bankruptcy, will shut down. Yellow Trucking has filed Chapter 11 bankruptcy and will wind down its operations in the coming months. The filing comes years after former President Trump's administration gave the company a $700 million bailout in an effort to save it and its roughly 30,000 workers. Despite the promise, Yellow has some more than 100,000 creditors and will face $1.3 billion in debt payments coming due in 2024. Yellow CEO Darren Hawkins attempted to reduce that redundancy through a restructuring initiative dubbed One Yellow. The Teamsters Union, which represents 22,000 of Yellow's 30,000 employees, agreed to the first phase of the plan but did not agree to the second phase, which the trucking titan insisted was needed for its survival. Yellow sued the Teamster in June, alleging the labor organization was unjustifiably blocked its modernization plan. Then in July, the company notified the Central States Welfare and Pension Funds that it would not be making its $50 million required payment, leading the Teamsters to threaten to strike. As a result, Yellow customers fled amid the strike threat, accelerating the cash trap, company's death spiral, and wiping out shareholders. So if you happen to get in and get out at $4 or even get out at the opening bell, good for you. Had you chased price, well, you probably are showing some losses, and it's never a great idea to chase a stock. It doesn't matter if it's a meme stock or a Fortune 100 company stock. Typically, you want to wait for the pullback. Now, what was good about Yellow was that price surged above the 200-day moving average. So this line was going to serve as support, and that's what it's doing right now. But nevertheless, the meme story is over. Let's just go to. Just want to see the monthly chart. Back as early as a couple of years ago, it was at 14. But yeah, can't win them all. The retail investors crew, Reddit, Wall Street Bets has had some great trades in the past. AMC, Bed Bath & Beyond, GameStop. There's more. So trading's a probability game. You're going to win some. You're going to lose some. Hopefully you win more. And even if you don't win more, hopefully your average win far exceeds your average loss. But in this case, Yellow's a dead stock at this time. Yeah, there'll be others. It seems like we're in mean era again, like it was in 2020. So stay tuned for the next mean video. Thanks for watching. Subscribe. Please like the video.